Hello, everybody. We want to welcome you to this closing panel. The Investor Conference is a pleasure to share with you with the panelists that we have. They will give different perspectives of M&A and vision of the IFC as part of the World Bank business vision. And they have different challenges or follow different objectives. So thanks again for being here once again. Today with us, we have Peter Hornung, Heinrich Lessau, and María Giraldo. And also we have Alicia Ferrer, Senior Investor Officer of International Finance Corporation, the World Bank, Maximiliano Graña, Head of M&A of Grupo Romero Investment Office, and Andrés Lehuede, General Manager at AntarChile and Inversiones Siemel. So now I give the floor so that you can introduce Peter Maximiliano. I am Peter Hornung. Thank you very much. I run the M&A area in Peru in Credicorp Capital. Let me introduce Maximiliano Graña. As Maria said, he's head of M&A of GRIO, the investment branch of the Romero Group. Grupo Romero has leading presence in agro-industry, infrastructure, real estate, oil, among others, and also in experience in countries of the regions as Peru, Chile, Colombia, Ecuador, Bolivia, Argentina, Brazil, and several other Central American countries. Apart from that, Max is a member of the board of directors of Oleoducto Central Ocensa, and he previously worked in investment banking area in New York for Starwood Hotels and Resorts. Thank you, Maxi, for being with us. Thank you. My pleasure. Would you like to introduce Andres, please? Of course, good afternoon to everybody. I am Heinrich Lessau. I'm in charge of the corporate finance team at Credicorp Capital in Chile. I would like to introduce you to our Chilean guest, Andrés Lehuede. He's general manager at AntarChile and Inversiones Siemel, an investment vehicle of Andenini Group. One of the main groups in Chile. For those of you who don't know the local reality, Angelini Group has two main businesses, which are fuel distribution and foresting. And among his responsibilities, he has to do the diversification of the group through investments in other types of businesses apart from the main ones. Apart from being general manager of AntarChile and Inversiones Siemel, he's also director of several companies in the group, Empresas Copé, Red Megacentro, Rentas y Servicios, apart from several others. Previously, he worked for 10 years in asset management of Credicorp Chile as Chief Investment Officer, and later other 10 years as Corporate General Manager of Cruz del Sur, an insurance company. He has an MBA from UCLA and a degree in Business Administration from Pontificia Universidad Católica de Chile, where we share alma mater. Thank you. So I am Ana María Giraldo, Director of Corporate Finance in Colombia, specialist in M&A. I've been in corporate finance for more than 20 years. And let me introduce you to Alicia Ferrer. She's the Senior Investment Officer of International Finance Corporation at the World Bank. She has great experience in financial services, is an expert in financial institutions, banking, and social impact, and bonds and capital market, has a strong financial profession and education, and has a global executive MBA from IESE Business School, University of Navarra. So now let me give the floor to Peter so that he talk a little bit about the trends in the M&A market. We have a few slides as a mode of introduction to share with you and the rest of the panelists. As Ana Maria was just saying, the idea is to show a couple of slides to stimulate discussion and debate among panelists. If we see the behavior in the last few years, registered in the Andean region, Colombia, Chile, and Peru, we clearly see a drop after the pandemic in 2020 and a reactivation in 2021. that even though it does not achieve the pre-pandemic levels in size and transactions, not even the historical records that we've observed in some other more developed economies, due to the pools of available capital and access to uh, capital that are quite appealing. We also have in 2022 or the first half of 2022 a good number of deals, even below the total amount of transactions. But however, for this new half, we face in the three countries a context of a political uncertainty, a global situation of high inflation rates, greater financial restrictions. So undoubtedly, this will have an impact on the development of the second half of the year. And that will be quite interesting to discuss with our panelists. Now, as for this drop in 2020 and the pickup in 2021, and even better for what we see now in 2022, the behavior has not been homogeneous for each of the countries. If we talk about Peru in 2021, the size of transactions and the number of transactions was quite below of the pre-pandemic level due to the uncertainty, the political and economic uncertainty of new administration. And even though 2022 aims at a greater number of transactions and sizes vis-a-vis 2021, this is still below the historical record or average. In the case of Chile, that was also undergoing uncertain political context prior to the pandemic with social unrest and the potential result of the Constitutional Assembly, the number and size of transactions in 2021 still represents 80% of the pre-pandemic levels, and the first half of 2022 shows an important increase in the number of transactions and a change of mood due to the result of a rejection of the proposal of the new constitution, but with certain uncertainty as also associated to this. In the case of Colombia, we do see an important recovery in the value of transactions, but we need to see this from the point of view that 60% of that value is seen in the transaction of Ecopetrolis. And in terms of number of transactions, we see that 2021 is in line with the pre-pandemic levels. No doubt in 2022, the political scenario that's still changing due to the elections in 2022 and also the different problems both local and internationally speaking, will become an obstacle, an important obstacle for the performance of the second half of the year. We understand that transactions that were left still before the pandemic still continue to happen, but at a slower pace. Another important piece of information that we can also observe in this chart is that for sure, mining, infrastructure, energy, transportation, and financial services have been quite active sectors. But we see greater participation of the technological sector, both in value of deals and transactions, and with a greater incidence in Colombia. If we go to the next slide, here, as I was saying, this is trying to nuance the sizes of the total amount of transactions that we see in the three countries that is always affected by very few deals. You can see the share of deals beyond 1 trillion and the percentage represented in terms of size and value of transactions. So there's few specific deals that we can see on the right chart. The share, or let's say the last layer, is quite high in terms of size, but very low in terms of transaction. And as you can also see, sometimes those transactions beyond a trillion could respond to political decisions or restructuring within an organization that might not necessarily correspond to a greater activity of mergers and acquisitions. In the next slide, what we've looked for is to define the drivers or the themes in terms of greater transactions and the transactions that we currently observe in the market. Of course, these themes are linked to high inflation and political uncertainty. We see that the main challenge will be achieving or obtaining a match between the expectations of buyers and sellers. As for themes, we'll go with the first one, which is a geographic diversification. Basically, we have local corporates and wealthy families looking to cash out investments in the country or in the region. Additionally, we also see the corporate carve-outs or the business unit sales. Basically, these are companies that are looking to strengthen their balance sheet, simplify their portfolios, and unlock value of business units that they consider no core or that have a relative low performance. Another theme, which is also important, is digital transformation. For sure, this is a strategic need for several of our customers in all segments to acquire technological and digital capabilities to face the increase of electronic commerce and a changing mood of our customers. Another important trend is the mature infrastructure. For sure, we'll be looking for rollover of investments. We're going to change the configuration from developers towards more investments and long-term infrastructure funds. These are assets that are quite scarce due to their nature. They are relevant size investments, so it increases the universe of investors, and they generate stable cash flows and normally linked to the dollar. Many of these themes that we just mentioned, in fact, give way to the next theme, which are opportunistic buys. Those investors with capital availability, they will find several opportunities that will be generated, and they will probably have more leverage on negotiation, or this could be called as a buyer's market. Finally, two themes that we wanted to mention. One are the environmental, social, and corporate governance aspects, ESGs, as well as the regulatory scrutiny. This has particular impact in Peru. This is a trend that is here to stay, and for sure, the ESG theme as well that has impact the due diligence, the funding costs associated to this things, the sales of those assets that are not considered green. And on the part of regulatory scrutiny, we've observed an impact increasing times of acquisition processes, especially in Peru. As for the focus sectors, and with a greater dynamic, what we observe for sure is technology. I mentioned this before, which is very much linked to digital transformation. We also have the healthcare sector that has become increasingly more relevant since the pandemic, and this is quite an active sector currently. Energy and power, both at the level of infrastructure projects that have become more mature, as well as the energetic transition in order to improve environmental impact standards at the ESG level. As for logistics, this is very much linked to growth of e-commerce and searching for efficiencies in distribution and an increase of storage in case of potential disruptions in the supply chain. Finally, we have consumer discretionary. When the region assimilates the same patterns of consumption as those of more developed economies, this is linked to everything that has to do with sports and pets. That has also had great impact. So with that introduction and with these slides, I would like now to give way to our guests so that they can discuss about this. Maximiliano, in that sense, I would like to hear your opinion about how you see the M&A environment in terms of activity from the investor's point of view. Also, the public data that we just mentioned does it reflect the reality of the market? And what are the perspectives that you have for the second half of the year? Thank you very much, Peter. Good morning, good afternoon. I think that what you were just saying in the slides is what we are observing. There is a very interesting pickup after 2020 that is reflected in 2021 and the first half of 2022. Despite all of that, I consider that there is a very big pipeline that is being created, many transactions that have been around since last year and this year that will probably be close to finishing it by the end of the year or beginning of 2023. Personally speaking, we see that there's a big pipeline, and in Peru, where we have more presence, but also in the rest of the region, we see that there will be a number of transactions quite high, and will probably exceed those levels of 2020, 2019, and 18 by the end of this year and the beginning of next year. Despite that, there are some tailwinds, which is the low liquidity and increasing rates that makes it difficult to have acquisition debt, and also restricts the potential of transaction and funding for transactions. But it also generates some opportunities. You mentioned that within the themes that you've just listed, that there are some opportunistic themes that happen thanks to this increase in rates and the economic setting that we currently experience. And another thing that's also related to increasing rates is the search for higher yields on the part of international investors. Investors are used to investing in more developed markets where for a long time, they were able to find an attractive spread. Now, with that increasing rate, that spread is really squeezing in developed markets, and it is more appealing for Latin American markets. That will increase demand for assets and businesses on the part of the M&A of international funds. I think that this is what we see in terms of volume and movement and attractiveness in M&A in the region. You mentioned something really interesting, who you compete with, who are your rivals, or who you meet in this sort of transactions.
Well, what I just said at the end of my previous comment, there is an increase of international and global funds region that was not observed in previous years, particularly after 2020, and also a context of political and economic instability in the region. So we've seen global funds less. However, now we are starting to see more opportunities, yield opportunities. And as part of the sectors, infrastructure is a specific sector where there is appetite because it mitigates many of the hidden risks of the region. So the fact of being linked to a robust currency such as dollar with long-term visibility makes them more competitive assets. Interesting comment. Thank you. Andres, would you like to say something in that regard? Yes. Good afternoon, first of all. And it is very reasonable what Maximiliano just said regarding this complexity that we see between buyers and sellers amid times of uncertainties, as Peter mentioned. It is usual to see that the spread increases, and maybe the M&A is no exception. There are uncertainties in the Andean region, and we are also in a very abnormal cycle. As you may imagine, the pandemic was, of course, unexpected, and the interest rates that are very and were very low for a long time, and some corrections that are being taken amid that scenario. So probably we are on the verge of an inevitable global recession. So we are amid a very aggressive and hostile environment. So I am not surprised that the M&A deals are also suffering in many markets. So personally, I am very optimistic. I'm optimistic about markets in general, in the region as well in the long term. And Maximiliano mentioned this, the implicit returns offered today by different types of assets. And we can observe what happens in the high yield bonds, American market and stock exchange markets. These bonds are very attractive. And sooner or later, those opportunities are taken advantage of by capital. And a liquid market like public markets, well, again, this issue or the M&As, as we see that many of these problems are being solved, then the expectation is positive. Thank you, Andres. And you mentioned something related to this openness. Have you seen some creativity, some turnout structure to distribute risks among buyers and sellers? Well, yes. In a scenario where after such a complex period, I believe that there are many industries that managed to overcome the pandemic, and the players of that industry probably have overcome the pandemic. However, they got to this point with a very weak balance sheet, weaker than before the pandemic. And in that reality, and Peter said it at the very beginning, there are some investors that do have the financial solvency to take opportunities, whereas other companies may want to privilege certain businesses or certain geographies. And here comes the imagination at stake. Here we need to combine the interests of the buyers with those of the sellers. In Chile, for instance, we've seen a trend of local investors, financial and strategic investors, to diversify risks. And we were all very much surprised in Chile at the changes in the discount rates. And in that context, there was the need to look for this differentiation in terms of business or in terms of geography. And we need to be imaginative here. And again, combining the interests of buyers and sellers, trying to look for alternatives, companies that want to, of course, take advantage of the benefits. So this has been a unique context that will translate into solutions different to what we were used to seeing as to how to optimize the use of capital and how to look for profitable opportunities. So the scenario for certain companies that were financially hit is complex. There is a reality of upward trends. There is a banking sector that is increasingly more restrictive in relation to the sectors that it chooses to finance. And the debt markets, as you know, are very dry, and the capital markets are non-existent. So this need on the side of investors and on the side of the companies must be translated into creative solutions, other than the pure and hard M&As that we've known so far. Thank you. Thank you very much. Alicia, in relation to these aspects, how do you see the number of transactions? How do you see all this context? Is there like inconsistency of information? What is the trend here? What is your opinion? And what is the role of the World Bank and the international entities? Do you think that there are new challenges? Thank you. Well, very briefly, the International Financial Corporation is the private arm of the World Bank. We provide debt to capital investments, to all segments. My expertise is on the financial sector, so my information will be more focused on that part. And we are right now seeing the same trends that were mentioned by Credicorp, and something that we are seeing also is a slowdown of M&As. I am surprised that, well, now there is a reactivation in the market. Honestly, we are not still seeing the same thing. We invest capital in two areas. First, we invest in what we call existing companies, big companies, and the other area is venture tech. So from the, let's say, big company area in the past 2 years, and in relation to the context that you mentioned, uncertainty, the pandemic, and political instability in Latin America, we've seen very little activity, particularly, and by the way, related to the tech segments in particular, we are seeing a lot of activity. So everything that has to do with health tech, fintech, energy tech, everything that is tech, well, that's where we are very active. And this is not just in Latin America, but all over the world. So this is a trend that we see has been benefiting from the market movement, and there has been lots of action there. And the role of the IFC when investing in capital. We usually have a development profile, particularly in financial inclusion, sustainability, and digitalization. And then we also, when we work with already established companies, whenever there is an interest in regional expansion, for example, when the company wants to expand to a less or more sophisticated market, for instance, when Colombian markets extended to South America. Or we also take part whenever a state-owned company is privatized. This maybe was not so common in Latin America, but in Eastern Europe or in some Asian countries, it was quite common. And then we participate in the purchase of secondary stock. Therefore, as these are the main criteria where we invest, I could say that we've been, let's say, not so active in the past years in relation to already established companies. Thank you, Alicia. Would you like me to elaborate a little bit on what we are seeing for the future for the Andean region? Yes, please, go ahead. As my colleagues already said, we see that a new cycle is emerging. We see changes in the monetary policy, an increase in rates, and we see a reduction of market liquidity. So, as you may imagine, there are political uncertainties. we still don't see this pickup of M&As that some of you mentioned. So we do see more activities in Mexico, Colombia, and Brazil, perhaps, but uncertainty still remains in the three. Well, Mexico is a little bit more stable. However, Colombia, Brazil, and Chile are at a very similar situation with lots of uncertainty and above all, with, how can I say it? We still cannot anticipate growth. So when we take part, when companies have to sell, given the current situation, so far we do not see many opportunities. I'm not sure if my colleagues saw those opportunities. We would be delighted to work with you. Your point is very interesting because this is part of what we see. Some sectors are more active, but of course we know that political instability is a risk in many countries. And there are some investors who want to wait and see. That is a fact. So Alicia, thank you for your reaction. Peter, you wanted to say something. Yes, very much in line with what Alicia says. I have a question for Maxi in terms of geographical diversification. What sectors and what geographies are you seeing outside of the region, outside Peru, perhaps, in order as alternatives to concentrate risk? And what are the challenges for Latin American investors in relation to funding issues or this price gap that we also see? Thank you, Peter. Well, in the group, and I know that this is also the purpose of many big groups in the region, we do have an approach of diversification. However, this has existed for long, and this is not a result of the current situation. It's a long-standing strategy. I would call it supplementary diversification approach, because without excluding the region or Peru as the core, we are interested in having a position in diversified markets. So we work, let's see, through the investment office of the family, and we make passive investments in the US and in Europe, in global funds, and diversified in the investment type, in the sector type. Some of the funds, real estate, lending, or the tax, or traditional buyouts. And through these investments, these more passive investments, we diversify a little bit. But I said this is supplementary in terms of growing in the region at the same time. As I said before, in the infrastructure sector, we think that there is a large gap in the sector. And this is what we focus on, not just in Peru, but in the Andean region as a whole. And we've seen in Mexico, in Brazil, and in some areas of Central America. So this diversification is good, is healthy. However, it does not exclude the core focus that we have in Latin America, where we think there are interesting opportunities. By the way, we are working with Credicorp very closely. Great, that is very interesting. Andres, taking Max's comments, you also share the same economic group status that the pandemic, the social turmoil in Chile, and everything has created. Unlike other companies, other smaller groups, more locally concentrated, which maybe reacted in a different manner at the beginning, looking for an accelerated diversification. And so the impact of this market that Peter mentioned at the beginning. So despite the fact that the risk approach was changed, are there any differences in terms of looking for opportunities? For example, geographical locations, specific sectors, where do you focus on? Well, the first thing that was already mentioned is that the discount rates in the region have changed. And so in the case of Chile, this cannot be denied. Now, the level of uncertainty is significantly greater than 3 years ago. There's no doubt about it. Now, there are some sectors that were and still are exposed to more complex scenarios. For example, mining, agriculture, basic services. For example, we have an agricultural branch where it is very hard to make decisions at the current scenario compared to the past. For example, the water rights is an issue. So the constitutional approach sort of created part of these uncertainties. However, we still explore opportunities. We have not abandoned the intention of investing in the markets where we are. And we could say that perhaps the mandate has not changed. However, with discount rates and more uncertainty in the region. As a group, we have always been very careful from the financial perspective, our balance sheet, trying to protect our financial creditworthiness. And with this, well, we have been advantageous in the access to capital markets and in the search of organic and inorganic growth. However, let me make a distinction here. It is, well, my position of speaking with two hats on this more sectorial and geographical aspect. For example, in Chile, the reality is very different. AntarChile has a different approach. We have different businesses. And in those businesses in Chile, we have successful business models and that we've tried to export to other geographies with successful results. And this has not changed. Those will be our core businesses. Of course, we've developed some more sideline businesses in Peru, for example, and that also can continue, of course. And in relation to your question in AntarChile and the investments in Chile, I must say that it is complex, but not because of a decision process. If we analyze business by business, and after the investment that is just being completed, it is unlikely to build another plant like that in Chile. So we have a production capacity that is relevant enough in the country. So on the side of Copel, something similar happens. It has 60% of share in the fuel distribution business in Chile. So it's unlikely that we can go beyond what the market growth allows. Now, Siemel is different because it aims at a more, let's say, middle-sized company with a broader selection of sectors. And we are exposed to some regulatory changes, and this must also be taken into account. Of course, opportunities may appear in certain sectors where the pandemic was overcome. However, the companies are weaker so that they could be part of its business, its assets, to focus on what is more interesting to the group. Chile, for its part, will keep on showing certain interests. In Chile, there's its exporting vocation that has not changed. Maybe the prices are on the rise. Maybe there are different assets that make the market more competitive and make those business more competitive. But there are opportunities. And you mentioned several sectors, and I agree, maybe with some particularities in the case of Chile, as healthcare, perhaps. As you know, today there are uncertainties in that sector, and maybe that could send investors to other markets. So my answer actually is related to making a difference between our core business versus those investments that we make in a more diversified manner.
Very interesting, Andrés. Thank you. Yes, very interesting. And let me ask you, Alicia, for something that Maximiliano also mentioned in the first question. We've seen something that was never seen before, competition in the region with large funds. There were some funds, and we listened this a week, another APR, and we've seen much more local appetite than ever seen before. So how do you see investments in a time of IFC and World Bank? How would that appetite for investment in LATAM compete with the appetite of the bank in some other latitudes, especially in the current geopolitical context, a war in Eastern Europe, a famine in Africa? So what are these flows for the IFC that compete with developing markets such as ours? Well, we have a lot of interest in investing in M&A in Latin America, but honestly, as I said before, we have not seen many opportunities. As was explained in the explanation, either they were very long projects like Ecopetrol or very small projects where we are participating in technologies for what I know. As I said before, I think that Andres mentioned, we also diversify a lot in capital investment through investment in funds, and through funds, we've seen some other international investors investing in Latin America, but direct investment as such, like the Arab Fund, which is investing in Odessa, well, in fact, we're not seeing much interest in that, because if we compare Latin America with the rest of the world, until now, before change of cycle with increasing rates, in the previous situation in Latin America, there was an excess of liquidity. There was very little growth compared to some other areas in the world, particularly the Southeast of Asia. And all of the political uncertainty started, well, it's been for long prior to the pandemic. So we've seen much less interest on the part of international investors in Latin America compared to Asia, where they've been much active in Vietnam, Cambodia, India, China. And the acquisitions that we've observed were in order to foster digitization. And those are acquisitions that we've seen in Latin America, which have been smaller, but we have not seen the acquisition of competitors due to inorganic growth, as we are observing in the east of Europe or in Asia. So for us, Latin America is one of the slowest markets, except for some countries where they have some infrastructure projects. And do you think that derives because we have a perception of market size, that our markets are still to be consolidated, especially as a regional level, but with an important issue, which is that most of these are family-owned companies that are not willing to negotiate with corporate funds. Well, that could be one of the explanations. The other is that, in fact, where we used to have different resources, now all of this boom that we've had, it made it much more difficult. We don't really know. What we've seen in general through Latin America is that family-owned companies are not really interested in being private. They are not interested in quoting, in having new investors, especially for a matter of transparency, because there's more reporting, and in some cases, because there are more audits. And in our case, we are insisting on corporate government and sustainability. So these are additional factors that discourage many family-owned businesses to open their capital to some other type of investors. So we've observed on the part of disruptive businesses, that's why I mentioned the tech and the early ventures that you have around. First, they need capital because they're growing a lot, and they are more open to all of these transparency requirements if you compare them with the family-owned businesses. As for large corporate businesses that already report and already need to be transparent, there's been a surplus in the liquidity market, and all banks were willing to finance any acquisition or buyout, and this trend has now reversed. So banks themselves, as was already mentioned, the capital markets have been reduced, the funding to all of the financial sector has been reduced, and so banks are only funding in a more selective way. So I believe that now, as the Credicorp team said, there will be a change in trend. We are not yet experiencing that, but since there's lower funding on the part of banks, and businesses may have to open their way in order to find capital because they won't be able to finance themselves through that. And maybe in order to close and give way to Peter, something that we've seen is that rates are next to the equity rate. So you need to decide whether to remove capital because the advantage is kind of lost, right? So we observe that this is not really the case. So thank you very much, Alicia. Okay, so now would like to make a question from the audience. Maxi, I'll give you the floor, but we would love to listen to the ideas of the three participants. How are you involving or incorporating ASG or sustainability criteria in your decision? Is there any difference in price or rates when you assess a target with a clear angle of sustainability? Thank you, Peter. Yes, ESG is definitely a trend that has come here to stay. And a couple of years ago, it was a plus. It might give you a premium in an valuation, but now it's a basic need. Now it's the transaction is interesting or not, and due to a matter of ESG, it might no longer be attractive. So beyond seeing these as a plus in a valuation, now it's a basic need that you need. Also in line with what was previously mentioned in terms of digital transformation, both go hand in hand, and they become basic conditions of a company or an asset, and not so much a benefit. And the ramifications of the ESG are being observed in all aspects of business and business operations, customers, creditors, shareholders. The push for ESG comes from all angles. Having said this, large changes in trends or large movements always generate opportunities. And this was also mentioned by Alicia previously. In Latin America, maybe the rollout of ESG is a bit slower compared to some other regions. So this generates an opportunity to get those assets and take them to an ESG standard that is global. I mean, in the acquisition, maybe there's less competition for the lack of ESG that Alicia mentioned, and it generates that opportunity of being able to acquire them in a less competitive environment and take them to global ESG standards. Yes, and what we've seen, Maximiliano, particularly in Colombia and with Core Capital, in Credicorp Capital, is that ESG, if you don't have a certain level, the transaction won't move forward. So maybe you might quantify how much it costs in terms of rates. So Alicia from the IFC, I think this is how it works, right? You might say not oil, not this, not that. Well, yes, in fact, there is an exclusion list of many sectors, and this list is being applied at a world level right now. Not ours, but maybe the whole world has the same lists of exclusion, and there are some, especially pension funds, the Scandinavian or the Dutch ones or Danish ones, they have an exclusion list that it's even more stringent than ours or may be in line with ours. But for us, ESG is not a stopper. It's in fact one of the development factors in that we want to promote. So if a company does not have an environmental and social management, what we do is help them. I would say that we are, let's say, the ENS Talibans. We help everybody implement this environmental and social management. So the attitude of business owners that want to implement this is very important. They should know that it's not just greenwashing as happens in many companies. And as for governance, that's also a key point. It's been for a long time. We have many promotion programs of a corporate governance of a company, and also because in lessons learned, when we review the performance in capital investments, those that have done wrong have been those with governance problems. Interesting. And Andres, in Credicorp Capital, somehow we've perceived that this theme in Chile, especially in the reality in Colombia and also Peru, but in Chile has been lagging a little bit more behind. I personally have always thought that if that had a consequence, the fact that from the point of view of capital availability, Chile has always been more autarkic country where maybe multilateral institutions, as the one represented by Alicia, had a lower role. And so this overreach, if you come from the ESG policies in the Chilean market, it might lag a little bit behind. Do you perceive the same thing? And to what extent is ESG a reality in your investment mandate? I agree 100% with what Alicia and Maximiliano were saying, in that ESG affairs today are hygienic, so to speak. It's a minimum condition to develop any business, to do investments, and also to develop projects that have impact in the environment, in communities, etc. And one of the large Chilean companies listed are doing quite well in an ESG valuation, probably for the same reason that you were mentioning, Jaime, that since they've been exposed to the scrutiny of institutional and global place, that was another force that forced them to move in this spectrum. In smaller companies that do not depend so much in the foreign investment, I think that there is a more advanced standard. It's also important to mention that we have new regulatory aspects If you observed a while ago, big companies were the ones that had a complete sustainability report, quite broad in terms of all of the efforts that were made in this regard. And I think that those sustainability reports are quite sound. There is a new standard, the 461, issued by the CMF. In practical terms, it forces you to have kind of memory. The annual Memoria and sustainability report. And indirectly, that's an obligation to all companies listed to catch up in terms of ESG matters so as not to lag behind. So I think that this is a 360-degree force that takes us as a country to have a business development in line with what times demand. I won't dare to say whether we are more advanced or less advanced than other countries in the region, but this transformation has been very fast and all round. And I think that it will continue to move forward. And I think that's okay. Interesting. I have the perception that at a local capital market level in Chile, we are 1 or 2 steps behind, especially due to the effects in local issuances in Colombia of institutions with very clear ESG mandates that I think that local institutions in Chile are now effectively adopting, but probably they were not adopting them at the same pace as other markets, probably. I think, well, we are about on time, so Henrik, maybe I don't know if you would like to open to any quick discussion or maybe make a wrap up and thank everyone for this very enriching discussion. So we're reaching the end of the panel. We would like to thank the 3 very important guests that we had. All of you contributed with your own perspectives, different markets, different mandates, different characteristics of institutions that you represent. Definitely, we have an interesting situation for the M&A sector. We come from difficult situation after the pandemic that really complicated things. You couldn't even go to get on an airplane to do a due diligence. And then the impact that this had with the mechanism of infection in terms of inflation, monetary policies, recession, increasing rates, and how it impacted the valuations of assets and how investors on the part of a sale and buy assimilate that new scenario. We discussed several complexities as price openness, different expectations, aversions to risk. So it was quite an interesting discussion. So we'd like to thank each and every one of our guests, to the panel, also the audience that joined us, not just in this panel, but also has been joining us throughout the conference program that is now closed with this panel. So we invite all of our customers and all of our local and international customer portfolio to join us again for next year's conference that we hope, I don't know if it's confirmed, but at least we hope it will be face-to-face. And you are all invited to continue in contact with us. Thank you so much. See you soon. Thank you. Bye.